Bloomberg Audio Studios. Podcasts, radio, news. And Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Elon Musk speaking with Mishal Husain, editor-at-large for Bloomberg Weekend at the Qatar Economic Forum in Doha. And we're joined right now by the very same Mishal Husain. Mishal, yeoman's duty interviewing Elon Musk there, not the easiest subject to converse with. What's your takeaway as to, I guess, his, kind of evolution back into corporate world away from some of his government responsibilities? Is that going to be a smooth transition? Is that going to be an immediate transition? What was your takeaway?
Hello, Paul. Hello, Alix, from Doha. Yeah, it's definitely quite an experience to interview Elon Musk. And for all your listeners, because anyone who saw it on Bloomberg TV or elsewhere on the live stream will know that it's a remote conversation. So I'm in Doha. He's in the US. But actually, it's probably a pretty intense experience interviewing him, whatever the format or the setting. I was very struck by the fact that the thing he wanted to emphasize was very much his corporate world and his businesses, not his role with Doge, despite the fact we know it's ongoing. And he said he'll be at the president's side for the remainder of this administration, in fact, even though Doge doesn't last for the whole duration of the administration. And when I asked him about whether this year is a pivotal year for that reason, he was kind of keen to characterize it as like, he's seen many ups and downs in his time. But I feel, especially with the fact that he ended up saying that he is going to do a lot less political donations and spend a lot less money on politics in the future, I wonder if really, as he said to me, I'm a technologist first and foremost, and I wonder if this, if these political endeavors have not given him exactly what he wanted and have put him on more uncomfortable ground than he'd ever acknowledge.
Yeah, I do have to give you a lot of credit. That was a tough interview. Anything remote like that on a conference stage is tough. And it was also really tough. You handled it really well. You didn't miss a beat. You flawlessly picked up all those questions. So I just have to give real kudos to you on that. And you pushed him quite a bit in the EV sales. And he seemed to really stand behind, no, we're doing really well, with the exception of Europe. What was some of your broader takeaway from that part of the conversation?
Well, look, it's clearly incredibly important to him. Tesla is a totemic company, and he's changed the car industry, not just electric vehicles. He has changed the car industry through what he's done there. It's also, of course, a very, very significant part of his wealth. So therefore, you can see that it's important on lots of different factors. Of course, the sales figures, I had them right in front of me for Europe, and these are big markets and places where people are, very concerned about climate and have bought into Tesla and its vision for that reason. So it'll be we do get month by month sales. So I was looking at the April ones. It'll be very interesting to see what happens in May. But obviously he's saying Europe is our weakest market, and look at the rest of the world. And he feels that Tesla has turned a corner, and his commitment to it. The bit you played about pay and the his pay award is obviously he's kind of like had the words that everyone heard on the judge who ruled against him in Delaware. But I think it's clear Tesla's incredibly important to him. And, while he's got, other businesses that are at this point, growing strongly in all markets, Starlink being a prime example of that, and the number of countries that are keen to get a slice of Starlink action and give him access to their jurisdictions for Starlink. I think there is something totemic about Tesla, and I think it came out in that, how keen he is for the brand to regain ground everywhere. Whether or not he can do it in Europe, I don't know.
Michelle, kind of, through the election and up in the first couple of weeks of the administration, Elon Musk was everywhere in every photo op and every video clip. And then he's really kind of gone radio silent for the last month or two. Where do you think how do you think this is going to play out over the coming weeks and months with him in terms of, re-engaging?
Well, I think those Q1 sales figures at Tesla really forced that. But I wonder if, again, not that he bit off more than he could chew, but politics and government is a very different world. And I think it's probably a mutual benefit that he and the president have been, much less visible at each other's side. I'm sure they are still very close, although Elon Musk has been public about his differences with Peter Navarro. And in many ways, where the tariff argument has ended up is much more in the Elon world and to Elon's worldview on trade rather than the Peter Navarro world. But I think what he said about political donations and less political spending in future will be looked at with interest in other countries as well. In the UK, for example, where Donald Trump is close to Nigel Farage, there would have been a lot of interest in whether at some point Elon Musk finds a way to donate to a UK political party, i.e. finds a UK entity to enable that kind of donation to take place. Remember, he's been seen a lot with the AfD leader in Germany. So I do wonder whether this intent and this his words on political donation have implications beyond the US.
All right, Mishal, we got to leave it there. Thank you so much. Really great stuff. Mishal Husain, thanks for joining us. Editor-at-large for Bloomberg Weekend. Also, to stay tuned for Bloomberg for everything from the Qatar Economic Forum. Really wonderful interviews there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Earnings. So Home Depot coming out. That stock up 0.4%. Home Depot maintaining its guidance for the fiscal year despite a 0.3% drop in comp sales. And U.S. ticket sales did tick up because of smaller projects, not the big ones. Drew Redding is Bloomberg Intelligence U.S. Homebuilding analyst, joins us to discuss. All right, we got the macro, we got the micro. Let's start with the macro for a moment. Deferring large projects, taking on small projects doesn't sound so bad. Do we get an idea of when deferring becomes non-existent projects?
So one of the reasons why home improvement and Home Depot have been so resilient is because a large portion of the industry has to do with that maintenance and repair-oriented work. So I think that's where they're seeing a lot of the lift now. It's homeowners who are taking care of the things that they need to just to maintain their home. This really isn't new. It's been a couple of quarters now where we've heard from them that big ticket discretionary categories have been relatively weaker. So think about things like kitchen remodels, bath remodels, flooring projects. These are things that tend to be financed by the consumer. And with rates as high as they are right now, it's just become a little bit prohibitive for them to undertake those projects. So I think in order to see more robust growth out of these categories, which is really the missing piece of the story, we need to see rates start to come back down a little bit.
How about tariffs? Is that impacting the cost of their goods, like getting lumber from Canada, for example?
So we think Home Depot is pretty well positioned from a tariff perspective. They source about 50% of the products they sell from inside the U.S. And, like a lot of other retailers over the last decade, they've done a great job in diversifying their supply chain. They actually said that over the next 12 months, no single country outside of the U.S. is going to account for more than 10% of their product purchases. So the fact that they're diversifying their supply chain should help with costs. At the same time, given their scale, the largest home improvement retailer, they'll have the ability to push back on some of their suppliers in terms of cost. Now, what they said is that they're looking to generally maintain their prices. So I think people took that as a positive. You have to remember, Home Depot sells about 30,000 to 40,000 products in their store. So when they talk about pricing, they take a portfolio approach. So you may not see them raise the price on a particular item that was tariffed, but they look at the elasticities of their various products and they'll take price as they need to where they can.
Gotcha. So they're going to manage that margin. So they're not going to sacrifice margin then.
So they actually guided to an operating margin pretty much in line with what they were looking for at the end of last quarter. There are a couple puts and takes. They're doing better on shrink, so they're managing their retail theft a little better, which is always a positive. So they're also, getting some more leverage from productivity. So, I think pricing is going to be a component of it, but they also have other levers within the business that are going to help to maintain their margins, where they expected them.
What's Home Depot do with their number of stores? Have they added stores? Are they fully kind of where they want to be? What's the store count story?
Yeah, so interestingly, Home Depot over the last year has actually returned to store growth, which is something we haven't seen from them in a very long time. They kind of have had the established footprint in the U.S., but as the business has grown so much, as they've grown their pro business, they've started to add new stores in markets where populations are growing or where they want to kind of take some of the pressure off the existing store base to look to drive some additional productivity. So this year they're adding about 13 new stores. They're going to do that. I think their plan was about 80 over a 5-year period. So the next couple of years, they'll continue to add new units.
So what does this mean for, say, Lowe's? Is this a good signal or is this more of a competitive signal?
So I think the story is pretty much the same for Home Depot and Lowe's. I mean, on a relative basis, Home Depot's exposure to the professional customer at 50% versus only about 30% for Lowe's is driving outperformance. So Lowe's exposure to softer DIY trends in those big ticket discretionary categories, I think will drive a little bit of weakness. But for both retailers, it's pretty much the same thing. You still have a weak housing market. Home sales are in the low 4 million range, which is about 25% below what a normalized level looks like. And both retailers, like many, are dealing with just an increasingly cautious consumer. There's a lot of discussion on when does the soft data start to translate into the hard data. And I think in the broader housing and home improvement ecosystem, I would argue that it already has. We heard from a lot of builders who are getting pushback on, buyers who are just reluctant to step into the market, whether they're concerned about their jobs or the direction of rates or the direction of home prices. And then, like I mentioned in home improvement, just that financing piece, and wanting to undertake such a big project is giving people caution.
Drew, just talking about rates, I'm looking at 30-year mortgage, 6.86%. What are your home builders telling you about consumers and mortgage rates? I mean, at some point you got to say, hey, this is the new normal. This is where we are. This is the interest rate environment. If I'm going to buy a house or sell a house and move down to Florida, now's the time, Yeah,
you're right. And I think higher for longer is the new normal. We actually rose back up above 7% yesterday. So coming into the year, there was a lot of expectations that rates were coming down. Maybe we'd see some more momentum in sales, but that magic number is somewhere with a 5 handle, maybe 5.5%. And, as we've discussed previously, builders have been able to get there through the use of financing incentives. But they're having to work harder for each sale, and those incentives get more and more expensive as rates rise. What we've actually heard from some of the builders is, maybe now's the time to not chase volume as hard as we wanted to before, because we want to preserve a little bit of margin and get the best return we can on our land assets. So you're seeing some of them dial back their volume expectations in favor of margin.
Interesting. All right, Drew, thanks a lot. Really appreciate Drew Redding, Bloomberg Intelligence U.S. Homebuilding Analyst.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
John Creekmur joins us. He is Chief Investment Officer, Creekmur Wealth Advisors. John, my notes say you're from Morton, Illinois. Is that right?
Morton, Illinois, the self-proclaimed pumpkin capital of the world.
There you go. That's awesome. Now, I have to admit, John, I had no idea where Morton, Illinois was, so I Google mapped it just a minute ago. You guys are right outside of Peoria, Illinois. So there is nobody more middle American than folks from Morton, Illinois and Peoria, Illinois.
The salt mines.
Exactly. Do the good folks out there, do they care about tariffs and stuff like that?
I'll tell you, care mightily. So Caterpillar Incorporated was actually founded in Peoria, Illinois.
Awesome.
There's about 85,000 employees of Caterpillar right here, just right across the river from where I sit. And obviously a large portion of their sales come over different parts of the world and over into China. And so obviously we care mightily about tariffs and how it plays out as far as our own economic security right here in Central Illinois.
How do you, John, then, as you think about when you talk to your clients, think about putting the tariff discussion and maybe some of the economic uncertainty that might result from a tariff world, how do you put that into your investment discussion?
It's been so interesting to watch over the last year, especially as we saw more discussion, even last year in the election cycle, about trade imbalance, about different methods to utilize and bring this trade imbalance into probably proper perspective. And one of the ones talked about was the blunt instrument of a tariff. And a lot of folks did not have much knowledge or background of tariffs, except for their remembering of Ferris Bueller's Day Off, and as far as the discussion of tariffs in that movie. And so not real academic there, but all of a sudden then they recognize this could be a big deal for them as far as inflation. It could be a big deal for them as far as overall economic certainty. So we really encourage everybody to take a step back. Let's look at long-term goal objectives. Ask yourself, are you an investor or are you a trader? And then based upon your answer on that, you can make decisions to make money in any environment. However, it's a little bit different methodology. So number one was back in April, we encouraged everyone, actually before that, back in the middle of February, we saw the market hit an all-time high, and encouraged everyone to say, hey, stay calm. There's going to be some uncertainties and some storms coming about. We want to make sure we make logical decisions based upon facts. And whenever we saw the tariff announcement hit on April the 2nd, it caused a lot of emotion and a lot of uncertainty. We know the markets do not like uncertainty. So we encourage them, let's allow this to play out. Let's look for opportunities in the carnage. Let's try to find ways to make money in the midst of. And sure enough, whenever more information came out, cooler heads prevailed, and we saw the markets bounce back, actually up 22% from that low that we saw on April the 10th.
So what are some of the companies that you like? Top pick.
I'll tell you, top pick right now is I love Leidos. Phenomenal company. Relative strength has been moving very mightily there. Strong moat as far as the technology space of defense and as far as in medical research and development. And so love Leidos and have been early on investor in that earlier this year. And it's been a strong performer. You know, we actually look for opportunities. Right now, we saw tremendous opportunities overall in the tech space with the sell-off there in April. And so big names in there, Snowflake, D-Dog, were a couple that we actually loaded up on early on, and very happy for those investments.
Hey, John, I have to ask for a friend here. Enbridge. That's a name on your list.
He's hooking me up on this one.
So talk to us about energy and Enbridge.
You know, Enbridge is very interesting. And so when we look at energy, we look at what part of the energy sector that they are in. And so we know for sure, as far as a lot of the oil companies, the Shells, the BPs of the world, the Exxons, the Mobils, they all saw some tremendous price pressures as far as on their equity prices. Whenever we saw the price of oil drop down, and yet at the same time, those involved in distribution, such as Enbridge, they're actually held very well. Their dividend is very strong. And so no matter what happens in the economy, we know they'll still be moving oil through pipelines and through other distribution channels. And Enbridge has been a long-term player in that. So we see them as a strong cash position, very low long-term debt. It's a great value holding. If you have uncertainty as far as in the economy, those type of companies such as Enbridge really play out well.
All right, John, thank you so much. Really appreciate it. John Creekmur, Chief Investment Officer, Creekmur Wealth Advisors, Morton, Illinois. Check it out, folks. Just outside of Peoria. Again, it doesn't get any more middle America than that.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
So the big take today is one that terrified me, and I think every woman out there will echo my pain. It's a wonderful piece written by Anna Edney, and it talks about possible cancer and health risks that are lurking in a popular OTC drug. If you've ever had a urinary tract infection and you've ever gone to the drugstore and gotten an over-the-counter medication, this part of the drug is in that. And that's what's so scary, because UTIs are extremely common and many treat it with these kind of drugs. Anna is national healthcare reporter for Bloomberg News, and she joins us now. Anna, walk us through what this drug is, what kind of brands it's in. Let's start there.
Yeah, sure. So probably the most popular one, I think a lot of our listeners will recognize, is Azo. It's an over-the-counter drug, so you can go into most any store, Target, Walmart, anything like that, and purchase it. You don't need a prescription. Urostat is another brand, but all of these stores also make their own generic version. So it's something that is supposed to treat the pain with urinary tract infections. A lot of people seem to think it goes beyond that, and it's actually curing their infection. So one of the issues being that people might need antibiotics, but instead they're using this.
Now, what's the drug in it that is causing some of the issues, and how do we know?
Yeah, so this is the active ingredient in all of these drugs. It's what the generics will go by. It's called phenazopyridine. I may still be butchering that name, but it's an unapproved drug, which was really interesting to me. And something sort of new to me, even though I've covered these issues for a long time, that I came across, what it means is the FDA has never formally approved this drug. So, while millions of women are using it for decades, there's never been a true vetting of, how this drug interacts with our bodies. One of the things that a National Cancer Institute study found, this was back in 1978, is that it caused tumors to form in rats and mice. That's never been looked at in humans because this drug has never gone through clinical trials or anything like that.
That is just, that statement is so insane. And Paul, just let me, I'll explain to you a little bit here. So if you have a UTI, it comes on really fast. And if you order to get medication from your doctor or gynecologist, you have to go in so they can test it. And if you're in pain and you know what it is because you've had it before, you just go to the store, pick it up, and you feel better in 24 hours. Like that's why these drugs are so popular and easy to access. And
what I learned in Anna's story, Anna, they're not FDA approved. They are essentially grandfathered in. So if I'm walking down the aisle looking at, over-the-counter drugs, do I have any way of knowing what's been FDA approved and maybe what hasn't been?
Yeah, I think that's a really good question. And, there were multiple, quotes out there from congressional testimony and other places where FDA staff members were talking about there are many such grandfathered in kind of drugs, but the agency did not give me a list, wouldn't even tell me how many might be out there. But there is potentially, this takes a little sleuthing. It's not that easy to do in the drugstore aisle, but there's a website that the National Institutes of Health runs called Daily Med, and people can search by drug there. I wouldn't say it's like the most user-friendly looking piece, but if you look for azo or Urostat or phenazopyridine, any of those, what will come up is kind of a disclaimer saying, this hasn't been vetted by the Food and Drug Administration, its safety is not known. And that kind of gives you an indication. You can dive deeper into that data and you can actually see that it's unapproved, but just for the layperson, at least with that disclaimer, that would give you a good idea at the top.
So what happens now?
I think that's a good question. So the FDA they have a system where they're supposed to have vetted these kind of very old drugs and given them what's called a monograph. This is the agency's instruction book. Here's how this drug should be made. Here's how the dosing, what it should be. Here's how it should be manufactured. They have not done that for phenazopyridine. So it's possible that, with this increased attention, that they could decide to look into that. They asked in 2003 whether this drug should actually be prescription only, just given the risks, and that people don't often follow directions on OTC drugs. You're only supposed to take this for 2 days, and you're not supposed to take it all the time. There are companies, particularly online retailers, that are really pushing this drug on women and girls kind of just to have on hand all the time, just in case.
I do.
And so,
yeah, why not, right? Like you get over the counter, you have it there. You're not going to use the whole thing. That's why it was so scary. And we really appreciate it. It was a great piece, everyone. You can read the big take story, possible cancer and health risks lurking in a popular OTC drug. You can check it out on Bloomberg.com/big take. You can also check it out on the terminal. Anna, thank you so much for writing this. Anna Edney, Bloomberg National Healthcare reporter.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.